Welcome to yet another live trading session with your host, Isaac Izy. Excited to be here, excited to be with you guys. If you caught the trade today, if you're in the Telegram channel, say boo 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 boo. All right. If you took the trade with us today, you must be in deep profit. So great way to start a week. Welcome to our live trading session. I am excited to have you here. I cannot wait to be sharing knowledge with you guys, and I thank you so much for being here with me today. Good evening, Joshi. Good evening. If you do have any questions, please make sure that you do ask the questions in the live chat on YouTube. Make sure that you place your questions there. If you have any comments, let's engage, let's all talk. Ask me questions, anything you need to know related to Forex trading, relating to what we are talking about today. Please do make sure that you ask in the comment section, and I will surely answer you. At the end of this session, we're going to have a Q&A session where for about 10 to 15 minutes where you can ask me questions based on whatever that I'll be teaching you today, and we'll look at some charts, we'll look at some opportunities, and then we will get some orders today. We can call out some trades, and then we'll be all profitable. I hope you guys have your funded accounts ready. I hope your accounts are ready. So because we're gonna be working. All right. Let's move on. While we are busy moving on doing our introduction, please do let me know where you are joining in from. Tell me where you're tuning in from. Let me know the country, the city, your name, as well as whether you're a beginner or intermediate or advanced trader. Please do let me know in the comment section. I love to know you. Tell me where you are from. I'd love to know where you are from. And let's get to know each other. Let's not be strangers. We are in this journey together to make sure that we are on to make sure that I'm not talking to strangers. And obviously I will introduce myself if this is your first time here. If it is your first time, welcome. I'd love to welcome you. All right, welcome. All right, let's move on. Let us move on. Before I continue with today's session, I'd love to give out a disclaimer because I'm legally required to do so. Any opinion, any news research, any prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute for investment advice. And if you want any investment advice or any financial advice, please make sure that you speak to a regulated entity, someone who is regulated by the Financial Service Board in the country that you are in. If you are in South Africa, make sure that this person is regulated by the FSCA, right? Everything that we discussed today, it's not financial advice, it's not investment advice, it's just general market commentary. All right. And because I love you and because Octa loves you, we are going to give you guys a bonus just for participating. All right. At the end of this session, you're going to have to use this promo code that I will give you at the end of this session. So make sure that you stay until the end of the session for you to get a promo code so you can get 100% bonus to double your deposit and maximize your profit potential. That means if you're funding with $5,000, you will get another $5,000 to increase your profit potential, to increase your margin, to increase your leverage, and all of that. Isn't that amazing? Make sure that you stay till the end of the session for you to get that one time. It's one time, it can only be used once, so make sure that you stay in and you don't miss out on that. Welcome. I see we have Clive, we have Johanna, we have Joshi from South Africa in Val Triangle, we have Bernard, totally new. I'm from Beaufort West. Welcome, welcome, Bennett. We have Clive from Heidelberg, Gauteng. We have Probina from India, all the way from India. We have Edinson, all the way from Peru. I think this is our first time having someone from Peru. Let's give a warm welcome to our first time visitor from Peru. Shout out, you are welcome, Mr. Edinson RV. We have Bernard, who is also a first time. We welcome you. Thank you. We hope this session is going to be very beneficial for you, and we hope to see you next time in our next session. All right. Before I proceed, I think it's important that I do introduce myself, as well as I've asked you to introduce yourself. Let me also introduce myself. My name is Isaac Izy. I am a professional Forex trader with a decade of experience. I come from a background of a 9 to 5 corporate world, and I've transitioned into a professional Forex trader, and I never looked back. And over the years, I have trained over 5,000 traders and help traders to become profitable in the Forex market. All right. And I have held over more than 300 Forex seminars in the Southern African region. I mean, Namibia, Mozambique, Botswana, all these Southern African region. All right. And my aim is to teach and train individuals to become professional traders and to succeed financially. That is my aim. That is my goal. And I hope by the end of today's session, you are going to improve. You are going to become a better trader by the end of this session. I hope that everything that I'll be teaching you, you will take it, go practice it, put it into practice, refine it until it works for you and you increase your profitability in the market. All right. Now, before we begin today's session, all right, I would like to speak to you guys about trading tips that you need to start using. All right. These are trading tips that you really need to start using before. All right. These trading tips, you need to start using them as you go on about your trading journey. These trading tips, I have so many of them, so many trading tips, but these are the most important ones, which I believe work better. All right, that I believe will work for everyone, which I believe which I believe they will help you, especially as a beginner trader, especially as someone who's struggling a bit in trading. I believe if you write these trading tips down and always refer to them, they can help you to become a professional trader. Number one is no loyalty is a good trait. Now, if you are in a relationship, please understand this doesn't apply to relationships. This only applies to trading. Okay, don't go tell your woman that Isaac said that no loyalty is a good trait. Okay, be loyal to your woman, be loyal to your man. Just a joke over there, just to make you guys feel good. All right, let's laugh. It's Monday, it's a beautiful day. All right, no loyalty is a good trait. What do I mean by that? What I mean is that in trading, one doesn't necessarily have to be loyal to a setup, doesn't necessarily have to be loyal to a currency pair. What happens most of the time is because of our obsession, our human obsession to be right all the time, and we don't want to accept when we are wrong. We find ourselves being loyal to a trade that is going against us. Has that ever happened to you? You analyze a pair, you say maybe you call out, let's say maybe you go short on the pair, or you sell GBP USD, and GBP USD starts going up, and you can see that you now have characteristics of an uptrend, but you continue holding because you are loyal, you are obsessed with being right. And you often hear people saying, I know it will come back, no, it will come back, it will come back to my entry. It's because of this obsession we have to be right, is we have become loyal to that particular trade. And what we have to do is, if it's not working out in your favor, please drop it and wait for the next opportunity. All right, so no loyalty is a good trait. All right, number two is seek quality over quantity. All right, as I always say, just because the market is moving doesn't mean that you have to be trading. Just because the market is moving doesn't mean you have to be trading. All right, just because the market is active doesn't mean you have to be trading. You have to wait for a quality setup. All right, one of the virtues of a professional trader is patience. Patience to wait for the right opportunities to present themselves in the market. All right, that's what you want to do. So you seek quality trades over quantity. Rather, you take 5 trades that generate you a good return on investment than taking 50 trades that end up just blowing your account. All right, and number 3 is when you are in doubt, do nothing. I'll give an example of today. Today I had some of my guys that were here and they were trading and they were not so sure about the trade. Another one was saying it's a buy, another one was saying it's a sell. Then one bought, the other one sold, and eventually one had to lose, had to blow an account because they were in doubt. They were not too sure of what to do. So as I always say, when you are in doubt, do nothing, or you will always lose money. All right, when you are in doubt, do nothing, or you go into part ways with your money. And we are in the business of making money, not in the business of losing money. All right, number 4 is never hope for an outcome. Never hope for an outcome. I see Bernard says, what must I do to have you as a mentor? Do you have like a paid training trading option? What you can do, Bernard, is that if you just read above, there is a link to join our Telegram channel. There is a link to join the Telegram channel. Please do join the Telegram channel. There's a lots and lots of free educational content in there. We also have we also have trading ideas. We have trading psychology tips and all of that. So make sure that you join. If you do want a one-on-one mentorship, we do offer that. So make sure that you can contact me in the Telegram channel as well, and then we can assist you with that. Okay, yes. So let's continue. Never hope for an outcome. Never hope for an outcome. That's number 4. When it comes to trading, put hope aside. All right. Put hope aside. We are technical analysts. All right. We are not emotional analysts. We technically analyze the market. All right, that's what we do. We are experts at analyzing the market technically, not wishful thinking. What a lot of people do is they come with hopes in the market. Oh, I hope I can take this $100 to $1,000. That messes up your psychology and your mindset as a trader, because everything that you do that is below, or that is perceived as below your hopes, or that is perceived as below your outcomes, it's now seen as failure. How many times have you hoped to get $100 and you get $90 and you feel like you didn't reach your target, and eventually the market reverses to blow your account? I'm sure you have been there. If you have been there, please make sure that you comment in the comment section there and let me know what your experiences were, where you wanted to reach a certain target, the market almost reached that target but then reversed, and eventually you were in a losing position. Please do tell me in the comment section your experiences regarding that. So never hope for an outcome. Take whatever the market gives you. React to the market. Don't think. Oh, that's another tip that I got from my friend today. He told me it's not about thinking what's going to happen in the market. It's about reacting to what the market is doing. So that's another bonus tip right there. Number 5 is the market is always neutral. The market is always neutral. I always say this: the market is going to do what the market wants to do. It's going to do what the market wants to do. Your job, again, is to react to what the market is doing, not to try and force it, not to try and hope what the market should do. All right? So please make sure that you understand this concept every time. And this also says market is neutral. It's got nothing personal against you. The market is going to do what it wants to do. So please understand that the market is neutral at all times. If you have that perception of that the market is neutral, then you won't have any problems. All right. Number 6, Take responsibility for everything. This goes in hand with what I just said. If the market is neutral, it means you are responsible for every outcome that you get, profits and losses. All right. So take responsibility for everything. For as much as you take credit for the profits, always also take responsibility for the losses. That means you didn't do something that you didn't do right, or the market just didn't play out the way that you thought it would, and it's okay. We all take losses. Losses are part of this business. All right, I call them operational costs. Losses are operational costs. If you own a business, you will know what operational costs are, and losses are that. So every business has operational costs. In trading, our operational costs is the losses. Okay, not there is no trader that is 100% profitable. We all take losses at some, so we have to take responsibility for that. If you refuse to take responsibility of the outcomes, you're not gonna learn, you're not gonna grow as a trader. So you want to take responsibility. So even if it's losses, so you can come back and learn and see, okay, what did I do wrong? What did I do right? Okay. Then always let the market make the first move. Always let the market make the first move. This is to say, always react to the market. Don't go before the market. Don't think of what the market might do. Follow what the market is doing. All right, follow what the market is doing. Are you with me? Follow what the market is doing. All right. And lastly, find a trading style that best suits your personality. This is very, very important. To everyone that's here, please know that as human beings, we are different, all right? We have different personalities. You and I are not the same. So that means even our trading styles cannot be the same. In trading, they always say, what's this word? They always say, there are many ways to kill a cat. There are many ways to kill a cat. That also applies to trading. There are many ways to trade the market. What you need to do is you need to find a style that best suits your personality. The concept or the blueprint of trading is the same. The market goes up, the market goes down. You buy low, you sell high. That is the true concept of trading. Everything else comes under that concept. All right. Now, what you need to do is within the concept of trading, you need to find, am I a scalper? Am I a day trader? How is my risk appetite? Do I risk, high risk with short movements? Do I do low risk with long-term movements? All of these things, you need to decide what works for you. If you're a patient person, you can do low risk, can do low risk long term. If you're not a patient person, you can do medium risk or high risk short positions. All right, in and out, scalper, or you get what I'm saying. You just need to find what works for you, what doesn't make your palms sweat. All right, anybody knows what I mean? You ever felt your palms sweating? Your palms, were they sweating while you're trading? We all know what that means, eh? Do let me know in the comment section if your palms sweat when you are trading. Then you will know exactly what I mean. So you need to find a trading strategy, a trading style that doesn't get your palms sweaty. His palms are sweating, knees weak, arms are heavy. All right. Let's move on. Let's move on. Can you believe that I got scammed under your name, Isaac? Guys, while you are here, I always say, guys, I don't do any account management. Please do not give your money to anyone that says they're going to trade for you, they're going to do an investment for you, and they promise you high returns. Please, and also, I'm going to post a link in the comment section where you can read an article that we did on MoneyWeb. Exposing the scams in South Africa. Let me quickly see if I can get that. And then I'll send it right on the right on in the comment section. So please, guys, please pay attention. There are so many fake accounts of myself claiming to be me, telling people that they're doing investments and all of that. I do not do any of that at all. Our company, what we do is we only provide education. We don't take people's money to trade for them and promise them high returns. This is trading. No return is guaranteed. Okay, whenever you see high returns, just know that what you call please just know that it may be a scam. Okay, it may be a scam, so please be aware of that. All right, please do be aware of that. All right, here I'm just quickly getting the, yes, I got the link there. I'm just quickly gonna put it in the comment section. Please make sure that you read that so you can what you call be aware of the scams that are going on in trading. All right, all right, right. Let's move on. Let us move on now. So today we're going to be discussing understanding chart patterns. We've discussed some of the few chart patterns before. We're going to be discussing other reversal patterns. We're going to be understanding trend lines. And as you know, it can never be me without using key levels and round numbers for our entry. So we're going to understand how to use trend lines with our key levels to get better sniper entries. All right. To get better what? Sniper entries. Do we have any questions so far? Do we have any questions regarding the trading tips that we were discussing? Do you have any questions? Do you have any questions? Please, I'm just gonna give you guys a minute to say if you do have a question or not. Good afternoon. Say how long the promotion code lasts to use. You can only use it once and it expires on the 30th of November, not the 31st, the 30th of November. That's when the code is valid for, and it can only be used once. All right, I see there is no question. That means we are moving on. So let's get right down to it. Understanding chart patterns. Chart formations will greatly help us to spot conditions where the price is ready to break out in a certain direction. All right, chart patterns are just there to let us know of what to anticipate in the market, when price is ready to break out into a certain direction, either to the upside or to the downside. They can also indicate whether the price will continue in its current direction or to reverse and go the opposite direction. All right, chart patterns help us to know whether the market will continue in the set trend or it will reverse and take the opposite trend. That's what chart patterns are mainly for, and they help us to determine what the market is going to do next. All right, in a nutshell, chart patterns help you answer three questions. One is, how do I find potential entry points in a rising or falling trend? All right, so chart patterns help you to find potential entry points. Number two is, how can chart patterns offer potential entry signals? Again, they give you entry signals. All right, number three, how do I know when to get out? They also help you with what? Exit signals. All right, either to take profit if the chart pattern is valid, or to cut your losses if the chart pattern is invalid. All right, are you guys with me? In a nutshell, that's what chart patterns are about. All right, reversal chart patterns. Number one, let's discuss reversal chart patterns. So reversal chart patterns are those chart formations that signal that the ongoing trend is about to change course. All right, a reversal pattern, that's what it is. If you are here last session that we had, you'll understand that we discussed the reversal phase. All right, the reversal phase is part of price cycle. All right, so we need reversal chart patterns to let us know when price is about to reverse. All right, if a reversal chart pattern is seen during a downtrend, it suggests that the price will move up later on. And if a reversal chart pattern is formed during an uptrend, it hints that the trend will reverse and that the price will head down soon. All right, are you guys with me? Just excuse me. Just wanna get some water. I'm a bit purged. Shout out to Octa for my water bottle. Thank you, Octa, for my water bottle. I love it. I love it. I love it. I love it. And also, if you do want your water bottle as well, please make sure that you attend our seminar, our live seminar on the 9th of December 2023 in Johannesburg, Sandton, in-person seminar, and it's a free seminar. Tickets are limited, so make sure that you get your free ticket. The link will be sent in the Telegram channel for you to get your link. So make sure that you so make sure that you attend that free seminar. It's going to be amazing. There's going to be so many giveaways. There's going to be so much information shared there. We're gonna have so much fun, and we're going to end the year with a bang and prepare for 2024. It's Vision 2024, so make sure that you don't miss that. All right, I'll see you on the 9th of December. I'll see you on the 9th of December. You're very welcome, Isaac. We're glad you like the bottle. I love it. All right, let's move on. Let's get back to business. So we're gonna be discussing 4 chart patterns, reversal patterns. We're going to be discussing the double top and the double bottom. We're going to be discussing the head and shoulder and the inverse head and shoulder. And then we're going to go into the charts, and then I can show you how to identify them and how you can trade them in confluence with key levels. If you know what key levels are, give me a shout out in the comment section. Just, fire emojis, dollar emojis, so you know what we're talking about. For those of you that are new, that's the secret recipe to trading. All right, secret recipe, and I'll give you guys just a bit of a hint today. All right, if you don't know what they are, please go and watch our previous sessions where I do explain key levels, round numbers, RB numbers, psychological levels in more detail, so that you understand them in depth and how you can use them to get your sniper entries. All right, now let's talk double top. Double top is a common reversal pattern that a lot of people overlook, especially especially this new generation traders that call themselves smart money traders, ICT traders, or institutional traders, and all of these fancy words that they use. And again, I'm not looking down on them. All right, I'm an old school trader. I believe in simplifying simplicity. All right, and I believe that the more you simplify something, the more it works for you, and the better it is for you to become profitable once you have a structured trading method. All right, double top and double bottoms are the most common reversal patterns that get overlooked a lot of time by traders, because it's just so simple and people like to complicate things. All right, simplicity is the ultimate sophistication. Now, what is a double top? So a double top is a reversal pattern that happens in a uptrend to signal a reversal to the downside. All right, so what will happen is the market will be going up in an uptrend. So the market will be buying and will get to a key level, all right, keyword key level, all right, and will fail to break that resistance key level. And then we will go down, come back again to the same key level to create another top, all right, and then the market goes down. What the market needs to do is it needs to break the previous high, which is a break of structure, all right, to the downside, to signal that the market is now starting a series of lower highs and lower lows. All right, so we break that neckline over there, and then we come and test the neckline, and boom, we go all the way down. I'm gonna open a chart, and then I'm gonna show you. We're gonna look at a couple of them. So just like in this example, we were going up, resistance, went down, resistance again, went down, broke the neckline to the downside, and we were in profit. Now let's quickly look at the chart and see if we can spot a double top. Let me see on a higher time frame, see if we can spot a double top. All right. I want us to be able to spot a double top. Let's look at that area over there. That is a more of a triple top. That's a head and shoulder. There we go. Bingo. There we go. All right. There. So we were going up to the upside. We created a top, went down, created another top, broke the neckline to the downside, and then the market shot all the way down. Do you guys see that? Even similarly here, we're going up, another top, broke the neckline, retested the neckline. This is actually a more beautiful one. Retested the neckline, and then we went to the downside. All right, do you guys see that? Top one, top two, neckline broken, went down, and if you're using a key level, we'll quickly if you're using a key level, 850. You see, we are at our key level there. That's where our reversal happened. Boom. And then if we go on a smaller time frame, I believe at that key level as well, we would have another reversal pattern over there. All right, yes, we have a triple candlestick pattern over there, of which we've discussed as well. All right. Okay, now let's go back to that. Double bottom. A double bottom is the opposite of a double top. This now happens in a downtrend, signaling a reversal to the upside. All right, so the market will be trending down, and then we get to a support key level. All right, and then we go up, create a neckline, come back to the same support level, go up. We need to break this neckline over there to signal that the higher high will be we're gonna break this this high over there and create another higher high over there to signal that that uptrend is now in play. All right, and as you can see there, we have a downtrend. A downtrend going to the downside. We have the market rejecting this support area, going up, coming back again to reject at the same key level or support area over there, also giving us an engulfing candlestick over there, and boom, we broke the neckline, and boom, the market went short all the way up. And let's see if we can spot a double top, a double bottom. We recently just had a move to the upside on that's more of an inverse head and shoulder. Let's see on a that's more of an inverse head and shoulder pattern, of which I'm going to show you guys just now. All right, let's see on a daily charts if we can have a double. Yes, there we go. We were going down, created a bottom, we went up, created the neckline, went down again to create a bottom at this key level over here. Let's quickly see what's our key level over there. And then 700 at 28,700. That's where our key level was. All right, on US 30. And then what happened? Boom, market shot all the way up. So we had a bottom, another bottom, neckline broken, neckline tested, and the market shot all the way up. All right, so like I said, if you're able to spot these bad boys here, you'll be able to let me quickly sort that out quick. Please, I do apologize, forgive me for that. All right, we had a break of structure over there, then the market did what? The market shot all the way up. Bingo, tested that level over there and shot all the way up. You see how significant these things are. Now again, with confluence with our key levels, let's look at that neckline over there and see where our entry would have been on that. We can use 30500 if you wanted to trade at the break of the neckline over there. You see, we had a double bottom over there, break, retest, bingo. You go on a smaller time frame. Where are we? We were in October. October. All right, let's have a look where we were. Where were we? How? Where is that? Oh, October 2022. My bad. That was way far. Okay, but yes, you guys do get the point. Can tell me about Euro USD bull or bear. We're gonna get into it, and then we're going to analyze, and then we'll see what we can come up with over there. All right, let's go on a 5-minute chart. Let's see if I can get it nice, so I can just show you guys that this works both on smaller time frames and bigger time frames. All right, we had a bottom, we had another bottom, boom, market went all the way up. See, do you guys see that? We had a top, boom, market went all the way down. We had a bottom, market went all the way up. Do you guys see that? I had a nice heavens, head and shoulder, the shoulder, head, shoulder, market to the downside. We're gonna discuss head and shoulders now. All right, do you guys understand double tops and double bottoms? Please do. Let me know if you do understand in the comment section. Just say easy, I got you. Just say easy, I got you in the comment section, so we can move on. Double top, double bottom, common reversal chart patterns that a lot of people overlook. And even now, if you trade in Dow Jones, you can see that we had a bottom there, bottom here, market broke the neckline, tested the neckline, and the New York Stock Exchange opened, boom, that happened. All right, see how simple that is. All right, even if you go maybe on a 15-minute time frame, you can see that this again works. All right, it works. All right, let's look at that. We're going to the downside, bottom, up, break the neckline, test the neckline, boom, market went all the way up. Are you with me? I see Clive say I got you. We got Mr. Money in the building. Shout out. Okay, let's go now to the next one, and I'm gonna show you guys how to use this in conjunction or in confluence with the with the key levels, so we can get snapper entries. All right, let's move on to the head and shoulder. Head and shoulder is also a reversal pattern. A head and shoulder is found in an uptrend. All right, so what will then happen is the market will go up to a resistance area or key level. It will fail to break, and then it will go down. However, it will come back and break the previous high to create another high, go back down to the neckline, and doesn't break that neckline, but it will come back up again, and it won't go above the head. It will create what we call a right shoulder, and after that, what we want to see happen, we want to see the break of the neckline. This is found at the top of an uptrend, which signals that the market will now be selling. All right, the market will be selling. Now, it's important to note that whenever you see this, doesn't mean that it will always sell. Sometimes it can be invalidated. So what might happen sometimes is you will see this, you will see this, and then the market will now go to the upside and invalidate all of this. So what you need to see before you enter is you want to see the break of the neckline, as we see over there. Market was going up, we had a shoulder down to the neckline, up, head, down to the neckline, up, shoulder, we broke the neckline, we tested it, and then boom, we went to the downside. What you want to see happen here is this neckline, usually we want to use our key levels, our 00s, 000s, or our 50s. Okay, we want it to be that price over the 50s, 100s, or thousands. That's what we want the neckline to be, because remember, we take our entries based on what? Our key levels. All right. If you don't understand what key levels are, I urge you to go to our previous sessions on the Octa YouTube channel. Subscribe, click the notification button so you can be notified whenever there is a session. But subscribe and go back to my previous videos, webinars that I've hosted before. I explain in more details the key levels. That's where we take our entries. That's where our entries are. All right, so after the break of the neckline, which is our key level, that's where we want to take our entry over there to the downside. All right, let's quickly go to the chart, see if we can spot one. That's another double top over there. You guys see that double top, break to the downside. All right. Let's see if we can spot head and shoulder. I want to look at, here's one. All right, so we were going up, shoulder, right, head, right, shoulder, boom, to the downside. Here's our neckline over there. All right, neckline over there, broken. All right, to the downside. All right. So let's quickly see if that our neckline is in line with our key level. All right, let's see. Our key level here will be 35. The nearest one will be 50, because we're using 50s, 100s. You see, break, test, you enter there, boom, to the downside. Right, here's another clean entry over there to the downside. So right shoulder, let me quickly add some text over there, so maybe you can take a screenshot of that. Right shoulder, please forgive my spelling. Right, not root, right shoulder. Let's put that in black for visibility. Let's increase the size for visibility. Right, yeah, man. Right shoulder, left shoulder. Guys, you can ask questions while I'm busy doing this. You can ask your questions so I can quickly respond to them. And we have our head over there. All right. The reason why we call it a head and shoulder is because, it looks like a human being. It has a shoulder, it has a head, and there's a left shoulder over there. And then obviously we have our neckline, which needs to be, again, like I said, our key level. Neckline, aka key level. Here we have a 50, 100, or 1,000. That's what our key levels are. All right, so we have our neckline over there. Markets, shoulder, head, shoulder, broke to the downside, came, tested the key level, and boom, we caught our sniper entry right there. Or you could have taken your early entry over there. Either way, even if you're taking it there, zero drawdown, bang, to the downside. Right? Do you guys see that? It's beautiful, isn't it? All right, glad you guys understand. Head and shoulder should have a retest after the break. Absolutely. So after the break of the neckline, we want a proper retest to confirm. All right. That's when you're taking a confirmation entry. If you're taking a risk entry, you can enter immediately after the break of the neckline. If the price has broken down and closed below the neckline, you can check on a smaller time frame like a 1 minute, 5 minute chart time frame and look for price action over there, and then boom, you can go all the way down with it. Now let's move on to inverse head and shoulder. Inverse head and shoulder is opposite of the head and shoulder. This is found in a downtrend and it signals a reversal to the upside. All right, this will happen in a downtrend where the market is going down. We'll get a level of support over there, and then we create our left shoulder. Market will go to the neckline, come back, break the previous shoulder, create a head, go back to the neckline, come back, create the right shoulder. It will not break the head, the low. All right, it will not break the previous low. It will close just above the head. All right, it will go and break the neckline, retest, and then we go up. As you can see that over there, the market was coming down. We created a head, neckline, we created a shoulder, neckline, we created a head, neckline, we created the right shoulder, we broke to the upside, and then bang, price shot all the way up. Let's quickly go onto our chart and see if we can spot any inverse head and shoulder over there. All right, I think from here I can spot one. It's important that you pay attention to them. All right, right shoulder. It's important that you pay attention. Right shoulder. All right. Once you familiarize yourself with them, it will be easier for you to spot them. All right, especially as they happen. All right. And then we have our right shoulder over there. We have our neckline over here. All right, let's see what's our nearest. Let's do 50. We can use the 50 or the 100. All right, 50 will be slightly below. Bingo, 50. All right, 30. That's our neckline over there. All right, do you guys see that? USD CHF right now is making head and shoulder. We'll quickly go and check it right now. We'll quickly go and check it. Thank you for letting us know of that. We'll quickly check it and confirm it. All right. So as we can see over here, market has been coming down. We created a shoulder over there, went down, created a head, came back up to our neckline area, created a shoulder over there. Eventually we broke to the upside, tested the neckline, which is our key level, 33050. It's either a 50, not a percent. I'm sorry about that. Somebody didn't tell me that. My spelling is not good today, yo. Be not good, oh, it's not good, oh. Right, so 50, 100, and 1,000. All right, can you zoom in? No, the reason for it for me to zoom out so it can be a bit more clear, right? So we have a shoulder over there, we have a head, we have another shoulder, we have a break. All right, break of the neckline, come back to tested, which is also our key level. Remember, we want to take our entries at key level. Look at that retest over there on that key level. All right, let's just zoom. That's key level. Right shoulder, left shoulder, head. Break to the upside, test the key level, and bingo, the market skyrocketed. All right, as we took our entries exactly at 33,050, which is our 50 key level. Like I said, if you do not understand key levels, please make sure that you all right, please make sure that you go and check our previous sessions so you can understand in more details why do we use the 50s, the 100s, and the 1000s. In South Africa, they say drink your water and mind your own business. All right. So do we all have an understanding of what double top, double bottom, head and shoulder, inverse head and shoulder, and how to use them with key levels? Do we all have an understanding of that and how we're going to take our entries? Before, someone asked about Euro USD, somebody asked about USD CHF. We're going to have a look at that. But before we get into that and see if we can get some opportunities there, is there anyone who does not understand any of the things that we discussed today? Please do let me know. Please do let me know before we can move on to the, because of time, I'm going to skip the trend line. All right. I'm going to skip the trend line. Okay. As I told you guys at the end of the session, I'm going to give you guys a promo code, which is Isaac Edu. Isaac Edu. Please use this promo code to get your 100% bonus. Take advantage of the promo code in 5 simple steps. Step number 1 is you need to open up your Octa trading app or visit the Octa trading official website. Go to your profile, find the promo code section in the menu, enter the promo code and press activate. Make a deposit and enjoy your bonus. Isaac Edu, that is the promo code for your 100% deposit bonus. All right, let's quickly, do you guys have that? Please take a screenshot of that, or I take a screenshot of the promo code. You can only use it once and it's valid until the 30th of November. All right, Q&A session. Let's go to our Q&A session. Please do let me know if you have any questions. At what time frame is good to identify? Bigger time frames are good for you to understand the overall trend of the market, the bigger picture of the market. But as I mentioned earlier when I was giving the tips, the last tip, remember I said you need to find a trading style that best suits your personality. And all of this do work on all time frames. We can find on 5 minutes time frame, we can use them on 15 minutes on daily, on a 1 hour, on a weekly, we can use them. But then it all depends on your trading style. All right. But also it's important that you check the bigger time frames for like from 1 hour H4 day 1, so you can understand the overall trend, the overall bigger picture of the market. So even if you go on smaller time frame, you know you are not trading against the trend. Okay. So like for an example, we identified this on a initially, yeah, it is on a 1 hour, we on a one time frame, on a 5 minute on a 30 minutes time frame was still valid. Let's see, at around, I think that area was 3050. I just want to see if we can maybe on a 15 minutes. Let's quickly see on the 15 minutes what we can. I want us to look at this entry over here, price 3050, and see that was around 1 November. I want us to have a look at that on a 5 minutes time frame. See if we can spot any pattern over there before. All right, so this was around where the entry was. From here, I can see a double bottom. All right, so you guys can see that. Do you guys see that? Bottom, neckline, bottom. All right. Break of the neckline to the upside. All right, so now we had a bit of a pullback over there, and then let's see where our key level is. So that will be 33,000. That will be a key level. So this is our 000 over there. All right, so we see what happened. The market came down, created another bottom over there. This is on a 5 minute time frame, and there was an impulsive move to the upside. Market came and just touched our key level, our major key level. Triple zeros are major key levels, all right? Triple zeros. You see that? 33,000, all right? You have 50s, you have double zeros, and you have triple zeros. Triple zeros are major key levels, all right? As much as we had identified on a 1 hour that we are going up, even on a 5 minute, if you're a 5 minute trader, 5 minute chart trader, you will see that you had a bottom one, bottom two, break of this key level over the test of it, and then boom, the market went to the upside. This is where you should have taken your sniper entry right there. All right, this is where you should have taken your sniper entry right there. Let's quickly go to Euro USD. Let's see what's going on over there. All right, let's go in a higher time frame. Let's look at the overall trend. Okay, so currently we were in a downtrend. Let me go on a H4. We were on a downtrend, as we can all see. We were on a downtrend. You can all see that. The market broke and changed character to the upside. All right. So first of all, we understand we were in a downtrend and the market changed direction to the outside, to the upside. So there's a change of character. All right. There was a break of structure over here. This is our first, break of structure to the upside, showing that the bulls are now in play. Okay. All right. We have that. All right. So there was a breakout of this trend line over there. Okay. Market went up, came down. And what do we have over here? We have a bottom. We have a neckline being broken. We have another bottom. Market created a double bottom to the upside. You see what I meant? You see what I meant? That this people overlook this thing. See what happens immediately after the test of the neckline. Market went all the way down to test the neckline, and then bingo, to the upside. All right. I think about last week, if not the week before, we looked at this move to say the market is going to go to the upside. We looked at this trade before. All right. So just over and above that, let's look at the key levels there. What's our key level? What's our nearest key level there? At this neckline over there. We understand that we need 650. 650 is our neckline. Bingo. That's where you would have taken your buy entries. You had a break of structure, a break of trend line, all right, and then the break of structure to show that we are now creating higher highs and higher lows. Market came down, created a bottom, went up, created another bottom. That's a double bottom, signaling a reversal to the upside. So we have break of trend line 1, all right, which was broken over there. Number 2, we have the break of structure 2, signaling that market might reverse to the upside. And 3, we have this double bottom over there. That's 3 confirmations that we are going to the upside. And 4, we have a break of our key level and a test exactly at our key level. And that's where you take your entry price. Your sniper entries would have been taken right there at that key level, 6650, boom, to the upside. All right. Do you have any more questions? Somebody spoke about Euro USD. Another one spoke about USD CHF. So on Euro USD currently there isn't much because the market has already left us. So what we want to do is we want to see, let me show you what we want to see right now. So we had a bit of a consolidation over here. What we want to see is and we see that price. I need to buy a mouse. A bit of a near man. Had a bit of a consolidation over there. All right. And we understand that after the consolidation phase, we'll have an expansion phase. All right. So we have the expansion phase happening over there. All right. So what we want to see the market do is let's quickly see if there's another key level over here. So market is actually sitting at a previous key level over here. I don't know why my laptop is a bit slow, but okay. See, we are now at our key level. All right, so we see that price is actually breaking the previous key level that we had over here. All right, what we want to see the market do is we want to see the market go up a bit. We want to see the market coming down to this key level over there, and we want to see that happening. That's what we want to see happening, and then we'll be targeting this area over here. So we should be targeting 6850. That's what we are targeting. We'll actually do the 650. Let's target that price over there. We're targeting that Euro USD should come up this if this plays out. And obviously, if you violate this over here, we need to see a reversal pattern taking place, indicating that the market is now exhausted. The buyers are now exhausted, so we're going to go to the upside. For now, the bullish bias is active because we have all of those confirmations over there, and we also have impulsive moves to the upside. All right, we have impulse moves to the upside. Bang, the market is doing exactly that. So we want to see a reversal, we want to see a retracement, then a reversal phase taking place. All right, any more questions? Any more questions? We are way out of our allocated time. I struggle with identifying the TPs. Where do I get my TPs? I believe, Lindy, you should please go have a look at my previous webinars. I do discuss where you should put your TPs, where you should put your take profits, your stop losses, and all of that. But we use key levels to put our stop losses and take profits. So please make sure that you watch those. And secondly, again, please make sure that you are in the Telegram channel. We sent a beautiful gold signal today. This morning it went into profits. I think we went up to take profit 2. All right, I believe we all profited on that one. More signals will be coming, more free educational content will be coming. And yes, man, just a reminder, if you are in Johannesburg, we have a live webinar. No, not a live webinar, but a live seminar in Johannesburg Center on the 9th of December. 9th of December, we have our first live not live trading, but a live seminar on the 9th of December 2023. We are all meeting. If you are in Johannesburg, I expect to see you at the seminar because it's going to be massive. We're going to be teaching you the A to Z's of Forex trading. We're going to have other speakers over there. We're gonna have giveaways. We're gonna be there's just so we're gonna have so much fun, and we're just gonna celebrate the year and discuss our vision for 2024, how we can help you guys to become better traders in 2024, to become better business people, to become successful in trading. That's what we are going to be teaching you on the 9th of December 2023. We'll try to live stream it, but if you are in Johannesburg, please make sure that you do join, and it's going to be massive. It's going to be massive. I cannot wait to see you guys over there. Tickets will be the link for you to get your tickets will be sent in the Telegram channel. Please make sure that you do join the Telegram channel. It's over there. And that's it from me, guys. Thank you so much for today. I hope you guys had a great session today. I hope you really enjoyed today's session. I hope that you learned something new. I hope that if you had any questions, I managed to clarify all the questions that you had. I hope that you're gonna be successful after this. I hope that you're gonna get to master snapper entries, and I hope you'll be able to spot those reversals before they happen. So yes, man, that's it from me, guys. We're also gonna have another session next week, Monday, same time, same place, Central African time, 7 p.m. every Monday, with me, your host, Isaac Izy. And on Thursday we have a live trading session. Next week Thursday we have a live trading session in the Telegram channel, so make sure you don't miss out on that as well. And that's it from me, man. Hope you guys are gonna have a great week. I wish you guys all a profitable week, and catch those snapper entries, catch those take profits. From me to you, I really enjoyed having you guys. I love you guys so much. I wish you guys all the best. God bless you. I love you, and Jesus loves you. Have a great evening. I'll see you guys next